Hey everyone, welcome to what is so far an incredibly boring trading day, but that's good. Gives us a little bit of a breath. We can go over what's going to happen throughout the week when it comes to we got a lot of earnings on the go. We've got a lot of economic reports, a whole bunch of things going starting tomorrow. That's why we're not really getting a lot of action when it comes to today in particular. So let's take a little bit of around the horn in the market. But as always, I want to remind everybody to make sure you're asking what it is you want me to look at. That's why we're here. So this is your guys' hours. You can ask about whatever charts you want, whatever it is that you want me to go over, take a look at from a technical point of view. Uh, if you don't know me, my name is Michael Nauss. I'm a chartered market technician and I'm a quant. So a lot of what I actually trade comes down to different systems, things that I can test and put my finger on and say, hey, this is if I do this over many years, then it will end up being a profitable setup and all that kind of stuff. So again, it ends up being a way to kind of combine technicals with the quantitative side, whereas most people combine technicals with news and things like that. I just don't care. I don't care about the news. I don't care what the company does. In fact, it's better if I don't know. So things like what sector it's in are important. What the company actually does, I don't really care. So let's get started here just by looking at the SPY, and you guys can see what I'm talking about when I say it's a really boring day. Not a lot here has happened at all. Here's kind of the intraday chart, 5-minute chart. This box right here, this yellow box, this is the opening range, the opening kind of 5-minute range. You can see we are still inside that. If we do the opening 15-minute range, we left it very briefly to the upside just to sucker in a lot of traders. And then we did very briefly to the downside to also suck in a lot of traders. So chop on both sides frustrates everyone. But if you look at the economic data for today, you can see why there's nothing that anyone cares about happened today on Monday. And then tomorrow we have, we have this trade goods, we have wholesale inventories, we have job openings, we have consumer confidence, we have a whole bunch coming tomorrow. And then if we go to the earnings side of things, you can see the same thing where we don't have anything unless anyone's like real interested in waste management and how that earnings goes. Nothing really we care about from the earnings side of things here. And then tomorrow, all of a sudden, we have Visa, Starbucks, Mara. The next day, we have Microsoft, Meta, Robinhood, QCOM, ARM, big names tomorrow, or big names Wednesday, big names Tuesday, nothing on Monday. And that's important to note, right? Again, as someone who is just a technical guy and a quant, I find it very important to go, okay, I don't care what the earnings are. I could not care less. It's not what I do. I won't take a trade based off of good earnings or good dilution or bad dilution or whatever it is. None of that concerns me. But the fact that to know what it is and that it may be coming and may be an event that is either going to push the market or in this case, an event that's going to cause the market to chop, I think is really, really important. So we can do things like not trade too much today. My robot's going in the background, it's doing trades for me, but I'm not trusting any sell-off. I'm not trusting any rally. I'm not looking at the market. I'm spending the day making content for my YouTube channel and coming up with new algos to test and strategies to run, things like that. And I just think that is a better use of your time. So it's great that you guys come in here, check out and do some analysis, because then when the market starts to pick up and it starts to move again, you've already done your analysis. The worst thing you want to do is get really super active when there's nothing going on, which there'll often be nothing going on, right? There'll be nothing going on more than there is something going on. That's just the way the market works. Another thing I wanted to look at here, and this is something I've been showing a lot of, is the commitment of traders data, which has come out and comes out every single week. So just a quick rundown for those who don't know, you have to declare by law whether you are long or whether you're short the market, what's going on. If you're a big speculator, a small speculator, all of this you have to by law in the futures market declare. So I often pay attention to two lines on this chart. We'll make this real big so that everyone can see. The first line is the blue line. This is us. This is the retail trader. This is the little guy and how long and short we are on the S&P 500. And then this green line here is the big guys, the hedge funds. Are they long or are they short? And you notice something as price has been moving higher on the S&P 500, these yahoos have been shorting the whole way up. Whereas for once, the retail trader has gotten this absolutely perfectly right. The retail trader bought the dip, bought more on the dip, has been buying more on the way up, and then just recently started to sell a bit, started to unload some longs. Last week, they got not they didn't do anything. So they didn't cover their short. But if you just look at the trend of this line right here versus what's been happening in the market, they've been getting more and more and more and more short, which is just insanity to me. So I wanted to show you guys that to go, if you're ever wondering why the market is doing so well, it's because these guys have been getting short. If you take a look here on Bitcoin, it's been the same thing, right? They've been shorting the blue line. The little guy has been buying this whole Bitcoin rally as we've been moving higher. They've been buying this. On the big guys, they've been shorting into this rally. So they've been short Bitcoin. They've been short the S&P 500. So if anyone wants to know why we are grinding to new highs day after day, week after week, month after month, it's because you got the biggest guys out there that are short. And put your conspiracy hats aside. If they're short, they have to cover. They have to go through that and they have to cover. So we want them to short. We'd love them to short more as the market grinds higher because it means at some point they're going to have to cover. So that's why I think that any news that could be interpreted bearish is going to be a buying opportunity because as we push lower, everyone has to cover these positions. So if we do get a little bit of a sell down in Bitcoin, and you can see this in Bitcoin, that every time we get any kind of a down move, there's buyers coming in. And I think that's a big reason why, is because they're short. Someone putting in chat, I think shorting should be illegal. Absolutely, wholeheartedly disagree. Right? Shorting does do a lot of things. It incentivizes people to find scam companies and bad companies, right? To short junk, like, right, AMC, for example, that's just losing money and is probably going to go bankrupt. People should be able to profit off bad companies. If we are to reward companies that are performing well by buying them and having them go to new highs, like Palantir, we should be able to punish poor companies that do bad. And if you do bad for your shareholders, they should be able to short those as well. So shorting is absolutely an imperative part of the liquidity of the market. Think of, guys like Muddy Waters who expose scams for a living. Hugely important to be able to short to create a fair market. And as we saw in 2008, if you weren't around then, it was every time they didn't allow people to short, because in 2008, they barred a lot of shorting of financial companies, thinking that would help save the financial system. And it made it way worse. Because as soon as the government came along and said, you're not allowed to short Lehman Brothers, it was kind of like, being on the playground with your little brother and saying, hey, this particular don't pick on my little brother. He's weak and you'll beat him up and he can't defend himself. And then they left. So every time the government said, you can't short this bank, everyone said, oh, that bank is hurting. So let's short it. So follow up and we'll, again, I'll get to your symbols, but this is a good little chat to have. What happens when they short good companies? They get blown out. Right? If your stock is short, the the only time, there's one time that a company cares about its share price. Sorry, two times. One is if the owners of the company want to sell. They have the shares, they want to sell. The only other time that they care is if they have to raise money off the back of retail investors. So, for example, again, AMC had to 10x its float since its original short squeeze because they're losing money and they're getting hammered and it's an awful company. Tesla is a perfect example. People were betting wholeheartedly against Tesla for a long, long time back in 2018, even further back in the 2010s, 2012s. Thing is, he made a good company that made good cars that make money. The only time that the stock price matters to the company is if they have to raise money. Otherwise, short it down to oblivion. If I'm running the company and I don't have to raise money, short it all day, because if I perform well as a company, those shorts are going to get blown out. Those shorts are going to be forced buyers. Those forced buyers are going to push my company higher and everything's great. So it's not the shorters that make your company go down. It's the fact that it's a crap company that doesn't make any money. So if it's a good company, you want people to short it because they're going to have a hard time when things get blown out. So shorting is very, very important. Shorts are not evil. They are just taking bets that the company's overvalued, just like people who are buying companies are taking bets that the companies are undervalued. If the shorters are wrong, they have to cover. If the buyers are wrong, they have to sell, right? So it's not a bad thing. It's not a good thing. And again, if nobody is shorting, right? You could, every country in the world could come together to try to force the price of Apple down. As long as they continue to make a crap ton of money, doesn't matter. The stock price is going to go up. If they stop making a bunch of money, the stock price will go down, right? It's very much if you see people ever, and you'll see it sometimes on stock twits quite a bit, where this price is going down because people are short the stock. It's not how it works. They're probably caught in a bad long, and they're lying. They're looking for some external reason for why they picked a bad company, and they're still holding it, and they're losing money. Right? It's just not, the shorts didn't push it down. If the company's good, the heavier short is the buys the cover. It's why I always got a chart up here from Finviz. You can get these charts here for free, where it charts out the short value of the company. And I see some questions in here of things that we're going to get to, that this chart is going to be very relevant, where this is the short interest of the company. So this is TEM, right? This is a very interesting one because they've been shorting the whole time, right? They added to their shorts as it ripped. So I can roughly guess the average short price of this company because it's a new issue, right? If we zoom out, I would bet the average short price of this thing is around $50. They're underwater. If the company is a bad company, they will make money and it doesn't matter. If the company is a good company and they start to make money and they start to push higher, then I know all of these shorts, this 6% of the company that's short, that's added fuel, right? Use these people for your advantage, right? You need two things to create a short squeeze. You need people short, and then you need the company to not suck. And Carvana, I think, is probably the best example over everything. Because the other meme stocks, they just went and they just died back down. It was Reddit getting a hold of them for a second. But Carvana, if you go to the weekly chart here, right, it was 60% short float in this area right here where it was close to bankruptcy. But guess what? They didn't go bankrupt. They were able to hold on. They were able to hold on through the whole bear market. They were able to start selling cars again. They were able to start making money again. And the shorts got blown out. So the reason that Carvana shareholders got this move, right? You can see the shorts didn't ruin it. It was barely shorted on the way down, right? This whole way down, it was barely shorted. It was like 5-10% short the whole way down. And then all of a sudden, when it got to the bottom, that's where the shorts started to spike, betting that this company would go bankrupt. They didn't go bankrupt. So those shorts had to cover all the way up. And now it's not really that big of a short company anymore. If they're right, fine, doesn't help us. If they're wrong, well, they can make a lot of money if they're wrong. All right, let's take a look at UNH to go and get started with here. So UNH is just very interesting. If you go back out on this chart, this 250 area, call it, 275 to 250. This is a pretty important zone. We've talked about this in the Friday show. I know Leah's been selling puts against this thing. Technical analysis has its place. Technical analysis is great. When the DOJ is involved in your company, it's not about technical analysis anymore. It's about whether or not you did shady stuff and whether or not that shady stuff is priced into your stock. Full disclosure, I own some of this. I remember I bought some right here and I bought a whole bunch on this candle when it closed positive, and then I sold a bunch up here. So I still have some from this candle. I think it's right 260 something is my average price. And my bet is pretty simple. This is like a very small and very long-term bet, is that in like 5 years from now, I think the lows might be in, but I have a tight stop because that could change dramatically if there's some malfeasance that ends up being dealt with here. And not only that, sometimes the DOJ can just getting involved in your company can be a bad idea solely because it ties you up for a while, right? They could come in and rip apart your entire company and then find out that there's really nothing wrong. and you didn't do anything wrong and then send you on your way, but you've been tied up in so much legal paperwork and all this nonsense forever, that it ends up hurting you even though you were right. So be careful. But this is going to be one of those, it's going to do absolutely nothing for long periods of time, and it's going to move solely based off of headlines. There's going to be a positive headline about their trials and investigations, and it's going to pop 10%. Then there's going to be a negative headline, it's going to drop 10%. And that's probably all going to happen overnight. So you're not going to be able to trade it too much anyway. So if you are touching this thing, it's just very, very dangerous, I think, in the short run. Something like Boeing, I think, is a perfect example. Right back here is where doors started to blow off. And then, yes, we're back there, but what a ride you would have had to take in order to hold on to get there. It just becomes, you're dealing with news. It's like this thing is going to have earnings randomly, periodically, every couple days. There'll be like the equivalent to an earnings report and volatility where all of a sudden, right, good news, and then you're, oh yeah, great, you're looking at your broker when you wake up in the morning and your stock's gapping up and you're happy, and then bad news and it's gapping down. So long-term value bet, maybe. Very, very careful, right? Very, very careful on this one. All right, Reddit, RDDT, starting to get down the list here. Well, you can see I drew a pretty obvious, right? Don't need to be a huge technician for this zone right here. It's about 150. It's a huge level on this name. It was support back here. It was support back here. It's been resistance so far. So the thing I love about charts like this that are strong, this is obviously a very strong company that's performing very well. And you just simply play off the support and resistance. If we get above 150, great. Below 150, maybe you wanna get out. But I like this. I like the tight little base it's putting below this 150. That to me signifies that we may be chewing through some overhead supply. And if we get through that 150, that's super interesting. Another thing I like to do on these harsh pullback names, you can see how it really, really worked here, is this anchored VWAP from all-time highs. So this is the average price if somebody started buying from all-time highs, and it becomes a pretty good sentiment indicator. So a very simple trade that I'd be thinking about, just kind of talking myself through it on this one, is a buy if it gets a close over that 150. You put your stop under that anchored VWAP, right? Targeting the highs is a 2.63 risk reward, which means if you think there's anywhere near a 50-50 chance or better that if it gets through that price, it could challenge all-time highs, and that means mathematically a good bet. That's, again, how quants think of the market. I know that I have no way of knowing for sure what's going to happen next. All I can do is do these very simple kind of computations and say, okay, there's probably a 50-50 chance if this trend continues higher that we're going to challenge highs anyway. 2 times my risk. If I'm right half the time, basically means I lose $100 to make $200. And if I do that over and over again, in the long run, with a 50-50 win rate, I will be a very happy camper. Reddit CNC. Right, from a technical side of things, this isn't what you want to see. Just a big gap down, especially because this big gap down, wow. Yeah, this big gap down, some sort of event occurred. I see it's in health services, managed healthcare. So probably a drug or treatment or something that didn't do well. Not only did it gap down that day, it sold all day. So as soon as there's the big guys don't trade in the gap. There's not enough liquidity for them to trade when the market is closed or even too much in the pre-market. They need the liquidity of a market open, which is why they always talk about how the closing price is the most important price. Charles Dow taught us that a millennia ago, ages and ages and ages ago. He talked about this. And the reason that's so important is because of the fact that you the big guys need that liquidity, so they can't trade when the market is closed, they have to trade when the market is open and when there's movement to be had and things like that. So the fact that it opened up and they sold it all day, and it might be hard to see on screen, but because I have it faded, I don't want to see them too much, but huge volume spike on that day. If we bring up this, right, this is relative volume. So this was like 15 times normal volume on that particular day. That's huge. So you have huge relative volume, and they sold it all day, and then they haven't been able to get an uptick the whole time. That's just not something I would touch in any respects, way, shape, or form. It's just personally, to each your own. I'm just not interested in something that's just getting hammered like that. I have to take some sort of bet that that's going to change in some sort of respect. And I don't know what the news is in companies. I don't generally care what the news is in companies. I just know that the market didn't like whatever happened here, really didn't like. So if you're trying to grab a low, maybe you kind of lean against these lows here, but you're talking 2015. I don't even know if they're going to stand much relevance there at all in 2015. That's a place that you could take a shot. But yeah, just not nothing I would touch personally. Just give it time. SUNE is probably going to go bankrupt. I don't know anything about this company, but Sun Nation Energy has gone down from $15 million a share to $1.70. And I have to give this speech every time I'm on here because you guys, there's something in humans' brains. So it's not just you, it's traders and new traders in particular in general who have this thing of, if I buy junk companies that were beaten up a lot, then I'll make money if they go higher. We think, because in everything else we do, we think buying low and selling high in the market is also a good idea. Well, it's not. It's been mathematically proven to not be a good idea. You don't want to buy beaten up, destroyed stocks because quite often they're going to continue to get beaten up. Anywhere from $10 million down, you could have bought this for $1 million a share, 100,000 a share, 10,000 a share, 1,000 a share, $100 a share, $10 a share. It has been beaten up this entire time, and it's likely going to zero in this fashion. Obviously, this thing's never traded for $10 million a share. What happens is, for them to not get kicked off the exchange, they consistently do these reverse splits. So yes, maybe it could recover and get back to like $3-4 if you want to take that shot, but you are betting against a trend, and you're betting against all of these bag holders. And this is the way I look at it, is there's probably somebody out there who bought this thing at $10 million a share and is still holding the shares. There's probably someone out there who bought it at $2,000 a share and is still holding the shares. So you think these people get any amount of money back in their account? They're going to bail, right? That they're, if I'm holding this at $10 a share and it went down to 1, it comes back to 10, better believe you're getting out of that. So all of these people are bag holders, and they're all looking to sell at a moment's notice. It's a hard battle to kind of march your way back up. So unless you believe Sun Energy, makes me think this is a solar power dealer, but it's someone said, yeah, I'm down to 1 million. It's likely going to zero. Right, I can't bring up the charts because they're gone. Most companies that have to do reverse split after reverse split to stay listed, this was a 1 for 200 reverse split they did here. These are awful companies. They're going to go bankrupt. So if you're in the thread of this and there's somebody talking about short sellers doing this to the company, run. Mute that person and move on with your life, because it's not short sellers that did this to the company. It's the fact that they've never made a dollar and they're hemorrhaging money, and this is really just a scam to play off retail people. Now, can a scam pop? Could it pop from $1 to whatever? It could. Just make sure you're understanding market cap, right? You're trading this thing's market cap. You're not trading the price of this company. And for it to get to $20, it has to go from a $5 million company to a $50 million company. Well, what are they going to do to become a $50 million company? So yeah, just an absolute nightmare of a company that I just would not Would not touch. QBTS, the quantum names. There's not too much to say about a lot of the quantum names in particular. The right now they're just resting. So full disclosure, again, I'll always try to say if I remember, I've got a little bit of QBTS. I remember I think I took this live on the Friday show. Through this $11, I got out some when it went to 20 because I'm not crazy. I'm gonna pay myself on a chunk of that. Then I'm holding that $11 entry with like a break even stop. They're just basing. They're chilling out. So they need the next kind of kick in the butt. And if you look at them, they're all kind of the same, right? Rigetti, QBT, QBT, right? All of these things have pushed up and now are just consolidating sideways, which is great. That's what you want to see. You don't want to see spikes and crashes. You want to see spikes and then pullbacks or consolidations. Because what a consolidation is a lack of seller and an underlying bid. That's why things like bull flags work. I'm not one that I want to make, super magic, mystical craziness of technical patterns. Technical patterns are simply psychology. They're right, buy, sell, buy, sell. So what's happening when you have a bull flag is you have some sort of push up. You have people not aggressively taking profit, but taking profit. And what I mean by that is if you have someone aggressively taking profit, it means you have a big spike up. And if they're aggressively taking profit, they're selling on the way down. And every time, just sell, 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 market sell, hit the bid, hit the bid, hit the bid, sell it all the way down. When you have a push up and then a consolidation like this, it means you have people saying, okay, I'm in from here. If it gets at this price, I'll passively sell. So passively sell is like putting out a limit order, waiting for the market to come to you. They're not in a hurry to get out. And then it also means when you have a low end of support, it means you have the other way where you have people who are buying, but they're not aggressively buying right now. They're passively buying. They've picked a price. In this case, it's like 16. They've put out their limit. They've just kind of waiting for those things to buy. So as technicians, we just wait for one of those to run out of steam. Is it the sellers that run out up here, or is it the buyers that run out down here? Because if the buyers run out, then you have that push down. And if you have the sellers run out, then you have another leg higher. And who knows, right, which of these it will be. So that's what I'm waiting for when it comes to QBTS and a lot of the quantum names. They're all stuck in this range. So anywhere between 14 and 20, I just don't care about the company. Anything that happens inside this box is no information to me whatsoever. If we get back down to the low end of this range and we see buyers, then it means they're still there. If we get to the high end of the range, we see sellers, they're still there. We obviously have no way of knowing until after the fact whether they will be. And then once we finally clear the zone, we start to push higher. Great. Maybe I'll add to my position then or something on another breakout. But there's nothing for me to do here. If we break this low significantly, it's time to go. If we end up breaking this high, maybe add some. But in the meantime, you want to just kind of chill out, right? LESL 0. It's not as bad as a lot of these things. But yeah, it's one of those. It's listed on the NASDAQ, so you always want to look at that on the NASDAQ. And if it's under $1 listed on the NASDAQ, they have to do something to get above the dollar or you get kicked off the NASDAQ. It's just their rule. They don't have penny stocks on the NASDAQ. So you have to either become a good company to get over $1, or you have to do this financial reverse split shenanigans, which is problematic. So, let's look at prior earnings, right? This thing is hemorrhaging money. 27 cents per share loss. It is burning money like a coal plant that you're feeding. So your question is, you have to look into this and say, technically, this looks awful, right? This, it's just on its way down. Technically, it looks horrible. So you have to make some sort of fundamental bet that they are going to make money. You have to think as investors, you can go right now, risk-free, and get a 5% return on your money. Why am I going to invest in something that is losing money and doesn't have the ability in order to make money? It doesn't have a a runway in order to make money. This is why things like biotechs in this environment can still hold up okay, because you're not trading right now. You're trading, you expect this drug to earn X in Y period of time. This is a retail specialty store. What are they going to do to turn it around? And they have to do so quickly, or they're going to do one of those reverse splits, which is usually the kiss of death to the market. So I'm not interested in this guy at all. Uh, if just it's only a matter of time until they say, hey, either, you're going to take a bet on these earnings that they're going to move it around, they're going to change something up. And if so, great. You could get a nice big gap up. If it holds that dollar, then maybe people have more confidence that it will remain listed and not have to dilute shareholders and all that stuff. So then maybe it goes from there. But while we're under a dollar and we've got earnings up ahead, and every other earnings I can see in the past has been a miss, right? They've missed here, they missed here, they missed here. You got to go back years for them to finally beat an earnings estimate, right? Hemorrhaging money, hemorrhaging money. So if that changes, they start to make money. They kind of right the ship. Maybe it's less bad than that SUNE, but still pretty bad. Tilray. Uh-oh. Same thing, right? Exact same thing. This hasn't had to reverse split yet, so it actually did reach $300 a share, which is wild when people thought marijuana stocks were going to be a thing. And ever since, it's bleeding the whole way down. Earnings, their estimate to lose money. So maybe a short-term shot if they can hold up, but there's just, when I look at this chart, just like I mentioned before, there's bag holders in Tilray. There's probably people in Tilray who are still holding it from like $300 who think someday they'll be rich. And they're not. It's not getting back to $300. But, could it get to a buck or two? Maybe. What I think is going to happen in this space is once the deregulation, everything comes in, I don't think that's going to be good for the company or the sector, just because it will be priced in by the time it happens. I think what's going to happen is you're going to get people who will actually be winners when the whole weed thing takes off, like Philip Morris and things like this. They will buy a couple of these companies on the cheap, so that Tilray, which is worth a buck, they'll give you like $3 for it and just take it off your hands. That is the way I see a lot of these things ending, because if I'm Philip Morris and I have the ability to, I've got all these fields, I can grow whatever I want. I'm very good at growing things and distributing and packaging and all of that. I'm just going to buy somebody's brand and IP. I'm going to grow their stuff at my farm. I'm going to use them as like a brand thing. And the ones that get bought up will get bought up for a little bit here or there. And the ones that don't will probably go to zero. It's the problem with when you commoditized. I look at the weed industry the same way as I look at the solar industry. It was almost too good in the sense that you can't patent solar panel technology because it's existed for so long, and you can't patent weed because it's a weed, and it's not like it's really hard to grow. That's why they call it weed, is because it just grows like a weed. So you have something that you have no ability. Like, what's your advantage over other companies if you're a weed company? Like maybe name brand, maybe things like that. Name brand would be interesting. Maybe you've got like a special tastier weed. I don't know, right? But so I think it comes down to distribution, like how much can you lower your costs, things like that, because again, it's weed. It's very easy to grow. It's very cost efficient. So once the regulation gets out of the way, again, I don't really think it's going to be the weed companies. I think it's going to be companies buying the weed companies that end up doing well. If I were to trade the sector, which I do periodically, I do an MSOX, right? Triple leveraged the sector as a whole. This thing could potentially move based off of what you see in the whole sector, right? I don't need to trade the individual names because none of them are going back to highs. You're hoping for little bounces along the way, But because beaten up so much, little bounces could be 100, 200%. So you're just, let me take my shot here, let me take my shot there, and then move on with my day. If it ever gets into an uptrend, maybe I would hold something for a period of time, but it's just not. So scrolling down here. Another question on UNH, but I did that one. SYTR. SYTR just hit this gentleman's stop loss. I don't think this is a company. Nope. SYRT? Nope. So you might have to retype that. It's not a ticker. Let's try CYTR. Maybe it's this one. Nope. Not that. I don't think it's the Cyprus tourism revenues. I don't think that's what we're doing. SLS, Stellus Life Sciences. This is another insanity one that was $1 million a share. And these are more the ones. I did a whole video about this on my YouTube channel. It's on my StockTwits feed too, if you want to check it out on the weekend, about how I'm interested in these low bases right here. So for everyone who is presenting these awful companies that, continue to tank to new lows and potentially have no chance or low chance of becoming a company, the V bottom you're going to miss out on is not worth the risk that you're taking in order to stay and just buy and average down into these losers. This is the kind of thing that interests me more. And I have an example I'll show you guys that same example I did in the video, but it's the let them stop going down, right? So yes, if you missed the very bottom here on this one, which was 50 cents, now it's back up to 180. That sucks. It sucks that you miss that very bottom. That doesn't feel good. But right, there was a V bottom here. There was a V bottom here. There was a V bottom here. I bet you if I keep going, there was a lot more. There's a V bottom here at $21,000 a share. There's a V bottom here at $52,000 a share. There's a lot of V bottoms. But what happens quite often, if a company gets to a point in which it's buyable, you have a lot of these nerds out there who determine a fair value for the company. So SLS right now, it seems like that's like $1.50 because it got to $1.50. We're talking March 2023 right here, and it's done nothing since then. Not a thing. Down a little bit, up a little bit. It's just been chopping in this kind of sideways consolidation. This to me is a more interesting way to play a bottom for people who are just very obsessed with, I want to buy dips, I want to sell rips, I want to do that kind of thing. This to me makes a lot more sense because, the old saying, it's how do I get out of a hole? Well, first step is stop digging. This is the same thing. How do I get, a company to go up in price? Well, maybe first it should stop going down in price for a period of time. So this is at least stop going down in price. So now you can take a look at it and say, well, if it gets above this box, right? See these three resistance points here, one here, a lot of resistance here around, I call it like $2, right? So now if it gets above $2 and starts to leave this base behind, that's interesting. If it gets back into it, maybe you got to get out. You got to do those things a few times. So again, the example I brought up in the video, and full disclosure, I own this, so I don't want people to think I'm like pumping it, is this outlet, right? And I watched this because I bought a bunch of these things, or heart rate monitors for babies, just for a peace of mind of, right, I want to put this on my kid. I have had two kids in the length of time I've been watching this thing move, and just it gives me peace of mind to know it's FDA approved, all that kind of stuff, that their heart rate's doing fine. I didn't buy the stock because it just did this for years. It's like from 450, it just hung around 450. Then all of a sudden it had this massive push off earnings, and now it's like threatening to break out of the space. So I'm starting to buy it on the way up, buy it on the way up. If it holds outside this base, I'm going to buy more as it goes, and then look for some sort of, I don't know, fib target, or, how would you measure these things? Quite often people will just take the length of the base and they'll say, okay, I'm going to say this is the base. So what happens if I add that to the breakout? Well, if I add that to the breakout, we're sitting around $21 a share. You probably saw my troll posts if you go on my feed talking about 21 a share. That's how I got that price. Is now that it's broke out, I think if it does this same percentage gain from that kind of breakout, it gets to $21 a share. So for SLS, you could do the same idea where if this is where value investors have kind of put their foot down and said, okay, SLS at $100,000 a share was ridiculous. At a buck a share, it's interesting. And then you take that breakout and then just measure this particular move. And then the base break from there, that's like 726. That's insane. That's a awesome return if that's going to happen. And again, it just you're still buying a bad stock in a downtrend. You're still doing all of those things that are worried. There's still tons of bag holders in the name. All of those have taken place, but you've had a lot of time go by where people have just been okay with the price as it is now. It's not tanking, right? The difference with this SUNE that I ragged on so much is you can see it hasn't stopped, right? It hit its low like 2 months ago. So like I want to see back to outlet. I want to see this. I want to see this thing stop going down in 2023. So this had over 2 years of sideways action before moving higher. And same with SLS, right? SLS stopped going down in mid 2023. So it's had 2 years of sideways action. That's a nice base that you've built. Think of it just like you're building a house. You've built that nice base, and now potentially you can start to build a building out of that base. You don't want to just like put a spike in the ground and then try to build a building off of that. People have gotten conditioned to the price down here. Large institutions have probably been starting to accumulate in this price right here. A couple good examples I know was DNA. This is one that I'm watching. Same kind of thing in this low base. BZAI is one. Full disclosure, I own some of this. Well, you can see my entry right there. But the same thing where this one gotten killed, but it stopped going down a while. Like the length of the company is important too, obviously. This thing hasn't gone from 100,000 to zero. It's gone from what an IPO to $10, or it's de-SPACed at $10, and then it spent about a year, almost half a year, 9 months hanging out in this place, and now it looks like it's breaking higher. Now I'll trade it, right? So those are the personally, right? That's how I'm interested in these particular things. If you want to learn more about it, Google Stan Weinstein's stage analysis. This isn't something that's new at all. You can also do a Wyckoff. If we want to go down, let's go down in history. So if you think there's anything new under the sun, I've got some history lessons for you, you young bucks, as the old man here with the gray beard. Richard Wyckoff used to hang out with Charles Dow. You're talking ages ago, right? The early decades of the 20th century, a long, long time ago. And he kind of looked at it and said, hey, there's this, that this is kind of how markets move, that they had a sell off and then they had an accumulation range, and then they broke out of that range and then moved higher. This is how this guy traded markets like 200 years ago. Let's do Wyckoff. Wyckoff rules. Hold on. Wyckoff. Accumulation. Let's try this again. All right, here's one that's got a good picture. So he drew these diagrams, this accumulation diagram, like 200 some odd years ago, as his accumulation. This is how markets accumulate stocks, that they go down and then they chop around for a period of time, undercutting support maybe a few times. Then they break out and they consolidate and then they push higher. And I know that this is a popular topic because I know there's a lot of people out there who are very, very interested, as much as I'll tell you not to, of buying companies that are in the dumps. Let's take this and let's put it here and just try to line it up. Again, he drew this diagram like 200 years ago. And this looks pretty spot on if we put the spring right there and then a breakout and then that sideways consolidation and now it's moving higher. That's kind of interesting, right? If you take DNA, another one I was talking about, that's kind of the same thing, right? Big sell off. It does the spike. It does the spring, he calls it, where it undercuts that support but fails. And now it works its way back to the high. So SLS, right? You could look at this as the same thing. You could say that this right here is the spring, as he called it, where you undercut this prior support and then you bounce back up and then you start to grind your way to highs and then you start that trending phase. So if you're going to buy junk, I guess that was a very long rant to say if you're going to buy junk, just let it stop going down first. Don't try to be the guy who's buying it on the way down. It's just going to be a bad time. SDE. Hey, here's another one. Kind of interesting example. This is a weird chart. Some corporate restructurings, but right, I would look at this. I would draw a box kind of from the high to the low. Right, say, wake me up if we start to break the top end of this range. And then maybe it goes to fill the gap or something like that. I don't need to catch the bottom, right? The money is not in catching the bottom. Toast. Here's another perfect example. Right, a long time ago, but you had this, you could kind of call that the support right there, here and here. Then I had that undercut and that rip through and then consolidated highs and broke out. So again, this is the way to buy bottoms, IMO, in my opinion. This one looks great. It's breaking out of this little tight base here. It's got all-time highs that it might want to take a shot at. That's 65. It's a good price. You know you're probably wrong if we start to trade into this gap. That's a nice look. Oh, that was a typo. SYTA. That's what someone's looking for. Yeah. Right? So I'll just append this one that got a high of $1.5 million a share to the same thing, right? I would want to see more time take place where it looks like, hey, they beat some earnings, although they're still hemorrhaging money. It may have found a low here, but you just need more time in order to tell that, right? So just be careful. Manhattan Associates, interesting. So this isn't junk that came in, but it still had this kind of same accumulation phase, right? This is something that's been up. Look at all the green arrows here. Again, these green arrows are when they beat earnings, red arrows are when they miss earnings. Makes it easy to see for someone who's not a fundamental guy like myself. I don't like this reaction to earnings where it gapped up, but then they sold it the whole way down. It's not really what I want to see. I would just mark, you've got a pretty clear support resistance line sitting right there. I would say above that 239, you're probably looking good. Below that, I wouldn't personally want to touch it. However, you have this nice rounded bottom to potentially get there. So I would say, okay, this one looks okay. IREN. IREN. Well, this price seems hugely important for this name, this 1550. And you're not far from that. It's had an amazing run from $4 to $24. I would like to see as it starts to pull back and cool off, can it hold this breakout? Obviously not to the tick. Again, one of my favorite one of my favorite sayings in technical analysis is draw your levels with a crayon, not a pencil, which just means they're areas, they're zones. They're not, right? This price is important. One tick or two ticks below that price are useless. One or two ticks above that price is also useless. They're zones, they're areas. And you're getting a pullback into potentially this area of importance. So I would almost watch, you could even expand it out to like this low here and say anywhere in the 14s, the 15s or the 14s is interesting. If we're going to pull back and we hold that zone and then start to push higher again, that's where I would start accumulating. It's not on the way down, but if things turn around on the way back up again, I think would be very interesting. But this is a good one. Again, you're following strength, which I think is the right move. I think that's important to do. You're wanting things to work for you as opposed to against you. UNH, IRN, UNH. A lot of people asking about UNH, man. There's like 3 or 4 people. I mentioned it right at the beginning, but I'll just touch on it again now that we're near the end. I am long UNH from, around this candle at 250. I've been trading around the position, basically buying on dips, selling on pops. My thing with UNH is that technical analysis doesn't matter very much right now. And the reason for that is that it is so news driven. I don't care what Fibonacci, head and shoulders, moving average support you have. If the DOJ comes out and says you guys have been up to some shenanigans, this thing's going to drop like a stone. And if they come out and they say, no, we're clearing you of all wrongdoings, it's going to rip right back up. So you've got this range of possibilities, most of which are probably going to happen when the market's closed and are completely out of your control, and you can't really do anything about them. All of those things combined make me think, not really something I'm going to look to touch that much, right? Man U. We did a man H, we did a man U. So yeah, just it's just, again, I'm not one that is. There's some people who are like really dogmatic about technical analysis. I think one of the things about being a quant is it kind of black pills you on a lot of the things. Someone says, "Oh, you should buy stocks when they hit a 200-day moving average." I go, "Okay, I can give me 20 minutes. I can model up what happens if you buy things as they hit the 200-day moving average. We don't need to guess as quants. I can tell you the data, right? I can tell you whether it's a good idea or not." So what it's done is, because it's shown me what is important and what is not important in the market by being able to test millions of scenarios all the time. That I don't really have a problem with, hey, I'm not the guy who's going to say technical analysis will tell you everything. It doesn't matter what model I write up. It doesn't matter what the chart looks like. If the DOJ is knocking on your door, I think it's bad news. It's not something you want to play with. Man, or no, Eric first. Looks like I was drawing up a breakout there. Range bound. That's all I have to say. Okay, there's not a lot of technical. I don't like that this looks very much like a bear flag. Right? You had a gap down. You've had this slow grind higher that hasn't really been able to do anything. This looks very bear flaggy. That it could continue lower, but in the grand scheme of things, you're just range bound. You're caught within the middle of this range. Hi, Michael. Thank you for what you do. Oh, awesome. Oh, someone being nice. SFRM. SRFM. Surf Air Mobility. Oh, this is one that will go with the the Jobies and Archers and all of these names that are super, super interesting. They've been like, Joby has just been a beast. Look at this thing. Just nuts. Wild chart. Just ripping out of the space. It's kind of discouraging that if you have a hot sector, your name's not participating in it. I will, however, bring your attention to this whole Wyckoff analysis thing that we've done over and over again. And we'll go copy image and just take a look at this. Right, you've got the support, and then you got the spring, and then it works its way back up to highs. So this is very interesting to me. This is more of what I'm talking about for potentially buying stocks that have been beaten up, is that if this resolves higher and you start to break above this prior high again, about $6, that's interesting to me. If it gets back into the range, you get out and you can trade these things 2 or 3 times of if it breaks this area, get in. If it breaks back down, get out. Take your hits very, very small. Then if you're right and this thing wants to challenge highs, well, that's $30. That's a insane risk reward play on this one. Manu. Finally got the Manu. God, what a chart. Look at that. Let's do a line chart on it. All right, this is just not something I'm going to be at all interested in. Because just look at it. It's done nothing since its IPO in 2012. It's done just nothing, nothing, nothing. So I think zooming out's important. Right? Just no one really cares about this. It pays a dividend, seems, or at least it did. I don't know if it does anymore. So it might be one of those things that they have no plan on growing, so they're just giving money back to shareholders. But when I look at something like that, I just say, oh, this is just a sideways, ugly mess that I'm just not too excited about at all. There's nothing super fascinating about this. It's just kind of sideways, awful, ugly chop. So, wake me up if we ever get back to 26. Wake me up if we get to 10. In the meantime, nobody cares. No one cares about this company. So what you're expecting, what you're looking for is a big news event, not like, oh, the company's going to say nice words at this time. Something huge to have happen. Obviously a positive earnings report, but still hasn't been able to get going outside of that news report. ASML, and then we'll do a little wrap up and call it a day. These guys do something with semiconductors. The fact they're underperforming the semiconductor space this much is worrisome. They're also located somewhere else, not in the US. Anytime you see holdings NV these New York registry shares means this is traded overseas somewhere. So then you have to kind of ignore all the gappiness, because what's happening is it's trading somewhere else in the world. And then when our stock market opens up, most of the news and everything's already been processed. That's why it just, from this standpoint, it looks messy. That's why this one actually sometimes going to a line chart can look a little bit better. So I just look at this as it's a wedge. You've got these lows right here. You've got these highs right here. And as long as you're in a wedge, there's really no edge to be had. So one of those, if we can get and close above these highs, maybe we'll start drifting towards new highs. If we get below these lows, maybe we'll start drifting towards these lows. But again, I don't believe there's any magic in trend lines or anything. But what it's doing is just painting a simple picture to say, there's really not much here. It's just not doing much of anything. And there's so much nonsense that happens. So much nonsense that happens in these ranges that I really think the biggest thing is just to stay out of the ranges. Speaking of, it's a good way to wrap up there. Good segue, if I do say so myself. Since we've been talking, right, the market was here, I think, when we started, and it's here now. And it's done nothing all day. And like I said, there is no economics reports. There is no earnings report. The market, if you look at just the daily chart and the daily candle, has done nothing. So today's not the day to swing for the fences. Today's really not the day, I would say, to trade much at all. But today's a great day to come up with your game plan. If things start to work out better in the next couple days, then great. You can start to take trades after that. But till then, just hang back and chill out. And as always, I appreciate all you guys for showing up. I will see you back on Friday, I believe. Yeah, I'll see you on Friday. And until then, I'll talk to you soon.